We were talking about the Chinese currency. It's quite a big difference, I guess, what 8 or 9 months makes, because the start of the year, you and I were talking during the break, we were talking maybe about crossing 7, and now we're at 650. But all things equal, I'm guessing, and you could correct me if I'm wrong, a stronger currency has helped your business net-net?
I guess so. We really push very hard in the RMB-related products, and of course, a weak RMB won't be good for our business.
Right.
So actually, we do predict RMB can get into a very critical point. In the beginning of this year, there's 2 value points we believe right now maybe can change slowly. First is we do believe U.S. dollar index hit a a multi-year high.
Right.
And our RMB benchmark is against U.S. dollar indices. So when it break 102, 103, we do believe it already, reaches kind of like, a very overbought area. Chinese currency at that time really want to take a breath. And if U.S. dollar continue to be strong, and we do believe Chinese currency will tied with a basket of currency, which is weaker. If
Yes.
U.S. dollar become weak, it will be very good for Chinese currency. Take a breath and tied with U.S. dollar.
It was bound to happen because we were closer to 104. I remember that, February or March, and then now we're at 91,
Yeah.
which I guess in a lot of ways helps the sentiment around it, because when the Chinese currency weakens and then the psychology sort of changes, we had the outflows that stopped right now. But I guess longer term, a lot of people need exposure.
Right.
To Chinese renminbi, and there's so many ways of doing that now. You have the 2 stock connects, you have the bond connect, you have these various products as well. What would you say should be the best choice if I wanted to get exposure to the Chinese currency?
It really depends on your asset allocation needs for fixed income asset allocation or equity.
Say fixed income, for example.
Fixed income, I think right now we have multiple skin, and I would think a bond connected gradually will become one of the major convenience vehicle for the international investors.
The thing is, so people don't understand the Chinese bond market very well.
Right.
And sort of that may be one of the big hindrances, because the understanding of something you don't know basically turns you off from even considering those options. So apart from, I guess, getting over that mindset, what would you say would be the easiest sort of targets now? Are we talking dim sum bonds? Are we talking Panda bonds? Something more palatable for foreign investors?
Okay, I think a dim sum bond before is a very good vehicle. It's offshore in your territory, under your regulation, and in your kind of like form to
Right.
sell it to the foreign investor. However, I think because of the volatility of the CNH market and the participation in the market, which is, I would say, Chinese financial institutions did not have to do a great job.
Okay.
So I would say Chinese regulators really have been put a lot of efforts in the last few years to push RMB to be a more acceptable currency. And so far, I think a Panda bond can be another choice. And so far, I assume Chinese regulator also put all the efforts, all the channels to try to promote, the Chinese capital market.
What's the supply outlook, though, for Panda bonds? Because on the surface, it's a multinational
Right.
Selling Chinese-denominated debt. So it's the closest thing to understanding a fixed income security denominated in the Chinese currency. But what's the supply outlook like? I mean, who's the next? Are there big companies looking to line up?
I haven't to get a specific name, but I do believe there's a few, local government. Like in Europe, they have shown some interest. Because when you're funding for the needs, you also have to look at the cost of this funding.
Right.
So far, I think, RMB is not cheap funding.
Right.
So far. But I think the overall effort and the trend is very clear.